Welcome to the May monthly market report. Listen, I'm excited about this session. We every month we try to come together and talk about what's happening in the housing market so that you're the most educated professional on all these topics. This month, I'm excited because Alex Rousey from our team is going to be joining me and talking about the importance of pricing a home correctly in this market. Probably one of the biggest topics out there right now. I'm going to cover mortgage rates, and then on the back end, we're going to be talking about foreclosures. Listen, foreclosures are going to start to come up because they're rising, but I want to give you everything so that you have the truth about what's happening in this market. So with that as a backdrop, let's go ahead and hop in. All right, let's talk about the myth about mortgage rates. I think mortgage rates certainly, I know in the last few weeks have kind of ticked up a little bit, right? Based on all the conflict and the war and all that we already know about. But here's the thing. There are a couple things that I would say. The myth is a lot of folks are saying, hey, when are we going to go back into lower mortgage rates? And what they mean is something maybe with a 2 or 3 in front of it, and that's not going to happen. We need to show people that. I think most of us on listening today know that. The other thing is when, sort of the news talks about mortgage rates, they're kind of like, hey, they've gone up and you shouldn't even worry about buying a home right now, right? It's unaffordable. But let's kind of break this down and talk about this. Sam Cater with Freddie Mac said this: rates currently stand at their lowest level in the last 3 spring home buying seasons. The improvement, coupled with the pickup in purchase applications, refinance activity, as well as an increase in monthly pending home sales, underscored signs of improving momentum in the market. I certainly think we saw the start to this year being improving momentum. Saw that kind of stalled a little bit, maybe with mortgage rates being higher. If you look at this graphic right here, this shows rates over the last 3 years. And even today, this shows 6.3. I think we're at 6.5% as I'm recording this, but still a great rate environment if you were to go out and buy a home today. It's always the question of, should I try to time the market? It's never timing the market. It's always time in the market. It's always over time. Buying a home will be a great investment. We posted a graphic this past week at Keeping Current Matters on, year after year, how homes go up in value. And I certainly think, riding the wave of the roller coaster of mortgage rates is not a wise thing to do right now, but being informed and saying, okay, what do they look like? What does that actually mean is what we need to be doing. So let's look at an example right here, okay? This is a very, what I'm going to call a very normal, very average example of buying a home. If you went back to January of last year and you bought a home, $400,000 borrowed, the principal and interest payment would be $2,731. If you fast forwarded to the beginning of May, 6.5%, that mortgage payment is $2,534. So listen, here's the bottom line. Over the last year, mortgage payments have gotten $197 cheaper. $197 cheaper. Now, when you turn on the news or you listen to something about rates that isn't coming from our business, maybe it's even coming from our business, it's sort of the message of all is lost. My point would be rates have gotten almost $200 cheaper over the last year. That's a good thing. They're certainly not where they were when, rates were at, maybe dip our toe in the 5.99%. You see that there's about $138 difference in the payment of today versus that sort of great mortgage payment, I'll call it, or what consumers think. But a lot of people are like, hey, when we get into the 5s, we'll jump back in. And maybe that they think that payment's, $1,000 or $2,000 cheaper a month when it's actually just over $100 cheaper a month. I think there's opportunity right now when a lot of folks are wondering, okay, what's ahead? What's this going to look like? And even if we, I don't have a crystal ball today, but if we did, we would say, okay, what are rates going to do? What does that look like over the next few quarters? Well, we have the most up-to-date forecast here from the KCM research team. They do such an amazing job of staying on top of this so that you have all the information. But think about from Fannie, from MBA, from Wells Fargo, excuse me. And what you see is a very flat very not moving a lot mortgage sort of projection for the next several quarters into the middle of next year. Okay, so maybe bouncing around the low sixes, not jumping up, not shooting down into the fives. This is what this looks like visually as you look ahead. So I think we can give good advice on one of the things that people are very, very concerned with right now, staying on top of it. Listen, nobody can give you perfect advice on any topic, but what you can give is your expert opinion based on what you're seeing, based on what experts are saying, and helping people do the right thing, make the right decision for themselves and their family. U.S. News said mortgage rates aren't expected to change much over the next several quarters. I do believe that's true, which has implications for prospective home buyers and sellers. So listen, I'm going to pause right here. I'm going to turn it over to Alex to talk about the importance of pricing it right in this market.
Thanks so much, Dave. Really appreciate it. Here we are in May, the middle of the spring home buying season, and we got to talk about pricing. In this market, price it right or be ready to adjust. There is a disconnect happening right now in the market between what sellers feel like they're going to be able to get for their home and the reality of today's market. So let's get into it. I want to start off with a quote here from Realtor.com. Despite the economic headwinds whipped up by the ongoing Iran conflict and cooling consumer sentiment, most home sellers are brimming with optimism this spring and expect their properties to fetch top dollar. So how can Realtor.com say that so many sellers are brimming with optimism this spring? It's because they conducted a survey just about a month ago. Here are the results from that survey on the screen right now. It shows that 80% of sellers think they'll get their asking price or more. Again, this survey is just from last month, so this is current data. And what you can see there is 37% think that they'll get more than their asking price. And 46.4% say, I'll get my asking price when asked, which of the following price scenarios do you expect to happen when selling your home? That is pretty impressive considering where is this information coming from? Why are sellers feeling this way today? Well, there are a couple of reasons. First of all, a lot of people still remember their neighbors selling their home for $50,000 above asking price, multiple offers, selling in a weekend, like happened for so many people just a few years ago. You combine that with the fact that people go on Zillow and look at their Zestimate every single day, and they feel confident that they know the value of their home. And that can make it tricky for you, the real estate professional, to be able to go in and talk to that seller and say, here's what your house is actually worth, because they feel so confident that they are aware of what their home is worth and what they're going to be able to sell it for. And that's why so many people feel very confident about selling their home at or above their list price right now. The only problem with that is it's not matching reality. This next slide is one that I would encourage you to use whenever you're talking with someone who is considering selling their house. What it does is shows that more homes are selling for less than their list price than they have over the past few years. What you're seeing here is the percent of homes that sell for less than their initial asking price every single year going back to 2018. And what you notice is back in 2021 and 2022, most homes were selling at or above their list price, which is what sellers are expecting today. But over the past couple of years, increasingly more and more homes are selling below their list price, which you can see on the graph here going back to 2018 and 2019 is very normal. It's not a cause for concern, but it's very different. We go back one slide here to what sellers are expecting. 80% think they'll get their asking price or more. And in reality, 62% are likely to sell below their asking price. And so really the issue here is the list price. And that's why we've talked about this so much at KCM, the importance of pricing your house right from the start, especially in today's market, because people have this memory of what homes were selling for, and they're reluctant to adjust to the reality of today's market. I'll give you this quote. The listing price is one of the first details potential buyers notice when browsing properties. Now pay attention to this. A well-priced home can generate more interest and increase showings. On the other hand, if a home is priced too high compared to similar properties in the area, it may struggle to attract buyers and remain on the market longer. So list price is crucial because if you set it right from the beginning with the help of a professional, you're going to be able to get more eyeballs on the property, more offers, better chance of selling quicker, and possibly even make more money on the sale of your home. On the opposite end of the spectrum, you overprice your home, you're not going to get as many people looking at it. It's going to sit on the market longer. And then eventually what's going to happen? The seller is going to have to cut their price. So if you're having this conversation with a seller who's very reluctant or feeling very confident in what their home is worth, and based on your expertise, you realize that that is not in fact what their home is worth, show them this slide from Realtor.com. It shows the share of listings with price reductions every single April going back to 2017. And you can see here that people are still overpricing their home and having to adjust because the share of price reductions has gone up considerably over the past 5 years. Again, we're just back around normal territory, but people are remembering 2021 and 2022 and only 5, 6, 7% of people ever had to do a price reduction. You know, people had so many people coming to view their home, knocking down their door with offers, waiving inspection contingencies. The idea of having to cut the list price of your home was just not something that entered a lot of people's mind. But what you can see here is that now almost a fifth of every home is going to have a price reduction. And that is something that your seller wants to avoid. What's more is if the home sits on the market longer, meaning that it was overpriced too severely up front, the price reduction gets bigger and bigger. This is what you want to be able to help your seller avoid. This shows data from NAR that on average, a home that sells between 0 and 14 days on the market will average have a price reduction of 4.9%. If it stays on the market for 15 to 30 days, that goes up to a 6.1% price reduction. All the way up, you see there on the right, if a home is on the market over 120 days, there's going to be a 14% price reduction on average. Now, I don't know about you. The percentages work for me, but I think more people can relate to seeing just an average dollar amount. And that's what this graph shows here. We used we did our own analysis, taking the average price of a home that's listed at $400,000. What is it going to sell for realistically based on how long it's on the market? And you can see that on average, it's going to sell for about $380,000. And if it's on the market for over 120 days, that drops all the way down to $345,000. That's a $55,000 price cut if the home lasts on the market over 120 days. We bring this up. Why is it so important? Show it to your sellers to show that having to have a price reduction and having to have your home sit on the market for a long period of time is detrimental to your bottom line. Pricing it right up front, right now, realizing the reality of today's market is ultimately going to get you to sell faster and for a better deal. This is a quote from Anna Bozovich at Analytics Miami. She says, properties that sit on the market and go through multiple price cuts can develop a sense of staleness. Today's buyers are not only aware of that, they're actively tracking it in real time. When a listing lingers or undergoes reductions, buyers begin to question the asset itself, even when the issue is simply initial pricing. There may be nothing wrong with the home at all. It could be a perfectly good home that's just overpriced from the beginning. And the simple fact that it lingers on the market for a long period of time and subsequently goes through price cuts is going to turn buyers off immediately. You know, we're seeing in the market right now that homes that are priced right and in good condition in solid location are selling faster than ever. But homes that are overpriced or in need of repair or in an undesirable location are taking longer than ever to sell. So there's a very big difference between pricing it right up front and waiting and having to ultimately go through a price cut in the end.
All right. Thanks, Alex. Let's hop into this really quickly on today's foreclosures and what the situation is. Now, before I hop into this, I want to say this. I'm already seeing it. You're going to see it too. Foreclosures are rising in this country. And I think a lot of times that news is twisted to sort of get some eyeballs and get some attention. And maybe the truth isn't out there. I'm going to try to give you every aspect of it so that you have the truth and you can lead clients forward confidently. So activity is rising. This is a look at the last several quarters going back to 2024, and you see sort of this kind of tick up to about 120,000 foreclosure filings starting now. Not every filing turns into a full-blown foreclosure, but that shows you the rise. They are rising. That is factually true. The number of people filing for foreclosure. Now let me say this: last year in this country, there were over 300,000 foreclosures. Back in 2008, in that time period, there were 9 million. Short sales, deed in lieu, foreclosure, any type of distress transaction. So foreclosure is a reality in our business. We don't want to see anybody get foreclosed on. But I think it's something that we need to pay attention to. We need to be educated on. So they are rising. But if you start to look at this and you go all the way back to 2005, this is what the amount of foreclosures looked like. Kind of it has this massive rise during the 2008 era, let's call it, and that lasted several years. Dips down in the pandemic. You see where it falls to almost nothing. When, oh, by the way, no one could get foreclosed on. And then it comes back into what I'm going to call a very normal rate. Now, I don't think we're going to see a massive number of foreclosures for so many reasons. I'll get into those in just a minute. But one of the predominant reasons post 2008 is people learned, and oh, by the way, you had to qualify for a mortgage into the future, right? You're not just handing out money to anybody that says, hey, I want to buy a home. That leads to less foreclosures, okay? Adam Data said this: while volume remains below historical peaks, that continue to rise, especially in starts and bank repossession, suggests financial pressure may be building for some homeowners and could signal shifting housing market dynamics. Now, I think there are financial pressures that are leaning in on people. We don't see financial pressure in the housing market, but listen, if you lose your job or you're uncertain about the economy, you're going to feel financial pressure. And even look at this, a survey that was done by Credit Karma, more than 3 in 4 Americans report they do not feel financially secure. The top culprit is the rising cost of living, followed by current state of the economy. So the rising cost of living is affecting everyone. And I think it impacts, what folks feel in their mortgage payment. And I will say this too, the folks that have a great mortgage rate, and I'll get into that in just a minute, they're going to do everything they can to protect that, because they probably couldn't go out and rent an apartment for what they have in a mortgage payment. But let's sort of test that theory. And this is a complicated visual right here, but stay with me on it. This shows the number of loans that are 90 plus days delinquent going back to 2003. Okay. So sort of, if you follow that top line as credit cards, the red, bar, and you see the percent that are 90 plus days delinquent. Okay. Now, what do I want you to pay attention to? Look at the bottom kind of, right side. It's mortgages and HELOCs, everything to do with the house. Homeowners have prioritized that debt. They're like, we may let the credit card go late. We may let the student loan or my car loan go late, but I'm not going to mess with my mortgage. I don't want to lose this great mortgage rate that I have. I don't want to lose the house, all the things that we know. So that is a good sign for the housing market. Adam Data went on to say properties foreclosed in the first quarter of 26 had been in the foreclosure process for an average of 577 days. This was down 3% from the previous quarter and 14% from the same time last year, marking 6 consecutive quarters for decline. The other thing that we do know that is true is people searching help with a mortgage has slowly risen over the last several months to an all-time high. So those things are factually true. Americans feeling more squeezed financially. Americans saying, I need help with my mortgage. And they are prioritizing staying on top and staying current in their mortgage. The bottom line is, in this sort of housing market, Equity remains historically high. Take a look at this. This is the average equity in a home as of the fourth quarter of 2025 by state. And you see, like, state of Florida, where there's certainly a lot of inventory on the market, $275,000 average equity per homeowner. California, $596,000 average equity in a home. Now, the reason I bring this up, nobody is walking away from that kind of money. You know, back in 2008, people walked away when they owed more on the house than it was worth. And that certainly is not true today. Nobody's walking away from that. Nobody's walking away. You go to, Texas, $184,000 in average equity in a home. Nobody's walking away from that. Remember that. Oh, by the way, leave you with two more things before I wrap up here. The bottom line is the number of people that have an amazing mortgage rate in this country is astounding. 50% of the mortgages outstanding right now have a 3 or lower as the front number, right? 3.99 or lower. That's unreal. 27% have somewhere between 4 and 5% on their 30-year fixed mortgage. 21% you see there are 6% or higher. So you have an enormous amount of equity. You have people that have a great mortgage rate on their home. And third, the number of people that have their home paid off, 39.3%. You see it right there. 27% have a mortgage on their home that's at least 50% equity in their position. So you can confidently say 2/3 of the homes in this country that are paid off are equity rich. That's amazing. Amazing. So keep all of that in mind as you hear all the foreclosure information. We're going to stay on top of it and Keeping Current Matters to give you everything that you need. We do all of this because we believe most agents know what's happening for sure. Good agents understand it, but only great agents can explain what's happening. So listen, I want to wrap up this May monthly market report. Such a great treat to have Alex on to get to talk about all of this. And we will see you back next month. Take care.